We've been trading the financial markets for years,
by only using the volume profile and one candlestick.
and this simple strategy still makes us consistent profits.
It has a very high win rate, is 100% mechanical,
And so stupid simple that you don't even need to know anything about the volume profile.
because in this video we will teach you everything step by step so you can execute on this strategy today. So before we dive in, a quick heads up: trading involves significant risk and isn't suitable for everyone, and most retail traders accounts lose money. And I'm not a financial advisor, and this video is for educational and entertainment purposes only, and never trade with money you can't afford to lose.
So first of all, to plot the volume profile on our chart, we will go to the left hand side and choose the fixed range volume profile. We will take it from 6 p.m. EST all the way to the right hand side, and then most importantly click on extend right so the data always refreshes. So now what do we have here on our chart? This is the volume profile, and between these two yellow lines we have the so-called value area. This is where 70% of volume orders get executed in the market. So the difference between the volume profile and many other indicators is that this is actual data, guys. We are seeing the orders which are getting executed in the market live. So whenever new orders are executed, these pivots and this area will move. For example, this yellow line on the top is the value area high, and this below is the value area low. This red line here is the point of control. What is the point of control? The point of control is where most orders have been executed. This is where the most market participants and the most buying and selling pressure happen. And right now, the market is around the point of control area. Most people use it like this, but if you only use it this way, you will still lose. But even this is not enough to have a high win rate, because most volume profile traders have a low win rate and they take their trades based on discretion. So right here, you guys see this big area, and this is what we call the high volume node. So what is a high volume node? A high volume node is an area and levels where market participants were happy to transact. And that's why we had a lot of orders there. A lot of orders have been executed there. A lot of buying and selling pressure happened. So right now we are within this high volume node. But what actually matters is this level above, which is called the low volume node. So right here we have a low volume node, and this is something that I will always mark out on my chart. Why? Because a low volume node is an area where there is an imbalance between aggressive buyers and sellers. What we usually want to see when we have the low volume nodes is market going back to the low volume nodes, ideally filling them and giving us our entry criteria confirmations. Quick break here, guys. Most of you are prop firm traders, and today's sponsor is Prop Firm Match, a platform where you can compare different evaluations of different prop firms and see all the rules at one place, and also choose between the platforms you can trade on. And this way you can easily choose which evaluation suits you the best, and on top of that you can get huge discounts and loyalty points if you use Prop Firm Match. So if you are interested, check it out. The link is in the description. Now with this live trade example, I will show you the core concept of our high win rate setups. The best part is you can replicate it because it's 100% mechanical and rule based. So first let's break down what we actually have here. We have the low volume node, we have the point of control, we have the midnight, we took out already the Asia low here, and price is going up in here, and most traders would look for the next leg down, which is right, but we need something very specific for us to take this trade. We need some confirmations, because right here you guys see the stop loss gets hit. Why is the stop loss getting hit? Because we didn't wait for the entry confirmation, and in our case the entry confirmation is always the manipulation candle. So right here we have the manipulation candle. What is the manipulation candle? You see this red candlestick and you don't know what it means. Let's go over it right now. So we have 9:30 open. So this is the New York Stock Exchange open. Price was going up at one point, but then failed. So we triggered buy stops of breakout buyers, but we also triggered buy stops, which were stop losses of the sellers. If you guys see, we tapped the value area high to the tick, but then reversed. So at one point, this candle was very, very bullish and then reversed and broke the low of the previous candle and then closed below even. So in this case, you can understand that we have trapped both sellers and buyers, and that's why we call it the manipulation candle, because we see a major manipulation and then we get into our trades. And again, if you guys see, we tapped the low volume node as well, and at this point the low volume node became a little bit less, which is a great sign that volume and orders got in the market with this manipulation candle at this point. Quick question, would you take this trade right here? Yes or no? Locking your answer in the comments. Now, knowing all of this, let's see if this trade actually played out. And this is exactly where 90% of traders are doing it wrong. They just enter a trade without a plan, because you can even lose a winning trade without a trade management plan. So how are we going to manage this trade? So entry is right here. Stop loss goes always above the manipulation candle. Target is always a 1-to-2 risk reward ratio. At 1-to-1, we move the stop loss to break even. So worst case, no loss. So this line is our break even point. 1-to-1 gets hit, so worst case, no loss. Best case, we hit TP. So wow, just like that, clean move to take profit.
Alright, based on everything you have learned so far, what is the one thing missing to make this a valid setup? Is it A, B, C, or D? Comment your answer down below. I will give you 3 seconds.
Most people pick A, B, or C, and that's exactly why they lose this trade, because the correct answer is D, the manipulation candle, as you can see right here on the chart. Now let me show you why this is so powerful. So a lot of guys who don't know the manipulation candle can mistake the manipulation candle for an engulfing candle, but there is a big difference. So you can see we have also an engulfing candle to the left here. It's a big candle. We are engulfing like 3 bearish candles, but is it a manipulation candle? Absolutely not. But this candle, which is marked red, is a manipulation candle. Why? The whole logic behind the manipulation candle is that we manipulate buyers and sellers. The people who took buys here got completely trapped, right? So at one point, this candle was bearish, going to the downside, and then completely reversed, took out the high, and closed bullish. So at this point, when it was going to the downside, many sell stops got triggered, which were stop losses from buyers and potential sell stops from real sellers going into the market. But then we went up, took out the high, and closing bullish above. At this point, also stop losses of sellers are getting triggered, which are buy stops. So this is the difference between a random trade and a high probability setup. Now, knowing this, let's see if this actually played out. But first, let's break down what we actually have here. So now, again, we go to the left-hand side to forecasting and then take the fixed range volume profile, take it all the way from 6 p.m. EST to the right-hand side and check the extent right. So what can we see here, guys? If you look at the volume profile here, we can clearly see we have a big high volume node here. The point of control is way below here. That's a clear sign that we are in a bullish market and we are trending. We had a huge move up and then a pullback already, and now we are seeing the bullish manipulation candle here. And this bullish manipulation candle is not happening from a random area. It's happening from the value area high. So now my proprietary indicator is also showing me that it's not only the value area high from today, but also the weekly value area high is here as well. So we have again a minimum of 2 area of interest levels, which makes this manipulation candle very, very strong. If you go to the 3-minute time frame, we can see that we also have a manipulation candle here, and the long signal from my proprietary indicator is also on the 3-minute time frame. The reason why it's important that we also have a 3-minute manipulation candle is that we have an overlap. So that makes this setup a very, very high probability setup. So the target is a 1-to-2 risk reward ratio. At 1-to-1, you guys know already, the stop loss goes break even. So worst case, no loss. Best case, take profit gets hit. So watch this. 1-to-1 gets hit. Trade is at break even at this point. And then we have a clean move to take profit, just like that. These exact setups repeated multiple times this week. Once you start seeing this, you'll never unsee it. If you want the full breakdown of our strategy, I put everything into a free ebook below. So now, to be completely transparent, guys, you guys can see the setup on my screen. We have a beautiful manipulation candle. The proprietary indicator is giving the long. Why? Because we have the point of control, the previous day point of control, and and the weekly point of control as well. We are engulfing 3 bearish candles to the left, and it looks like a perfect setup. Literally an A+ setup. It looks absolutely amazing. So this is a valid entry. Entry is here. Stop loss goes below the manipulation candle again, and the target again is a 1-to-2 risk to reward ratio. So at 1-to-1 we will go break even. So right here the trade is going, we come very close to the stop loss, but then the trade goes into profits. And right here, the trade hits the 1-to-1, so it goes to break even, and then we hit the break even with the same candle. It's crazy. And right here, you guys see, we come very close to the stop loss again and then go all the way up. So we missed the take profit by 2 points, and what happens afterwards is even crazier because we come all the way to the stop loss, and this trade would have hit the stop loss if we would have not managed our trade correctly. That's why the trade management is super, super important, guys.
But first, we will do a mini quiz to test if you understood the strategy. So, you are seeing 3 different setups. Which one would you take? Write it in the comments, no cheating, and let us go over the setups and give you the correct answer.
The first one, we have a 5-minute manipulation candle trapping a bearish one as well. So very, very strong from the previous week's value area high, from the previous weekly high, but we barely missed to close above the previous day's high. Right here, the second one, we are reacting from the weekly value area high, from the previous week's value area high. We have a beautiful 5-minute manipulation candle. We are engulfing multiple candles. We have the range, and then we engulf the whole range. It looks very strong, but it is against the intraday trend. So setup C, we have a very strong 5-minute manipulation candle, also closing below all the bodies, engulfing the whole range, closing below the daily open, reacting from the weekly point of control, from the midnight weekly open, previous day's value area low. So a bunch of stacked up area of interest levels and a very strong closure on the manipulation candle. So the correct answer is setup C. Why? As I said it already, guys, we have a bunch of stacked up area of interest levels. With the previous setups, we had like 2 area of interest levels, and they were against the trend, some of them. In this case, we are with the trend. We are engulfing a whole range, which makes it very, very strong. And also timing is very, very important. We make that manipulation candle with New York Stock Exchange open, so we know the manipulation is done and we can get into that trade. And we see that the move is very, very strong afterwards as well, which is a clear sign that the trade was a high probability trade. Now, if you really want to become a consistently profitable trader using this exact framework, you can apply for my one-on-one mentorship program and see if you qualify for it. We cannot take everyone, unfortunately, due to the intense nature of a one-on-one mentorship. And if you don't qualify, don't worry. I will keep making high quality content for you here on YouTube for free. Like and subscribe. I'll see you in the next video.